Bring back in Oliver Sloup from Blue Line Futures in Chicago. Oliver, anything in the livestock there that kind of sets your hair on fire?
Well, not really, but I think you hit the nail on the head when you said that the markets are becoming a little bit more immune to the outside market volatility over the years. If you would have told me the S&P is down as much as it is, I would have thought that we'd have live cattle a buck or two lower pretty easily throughout the session. But it's holding in there really well. That February contract right near the 100-day moving average at 136. Seasonally, this is a friendly time of year for live cattle and feeder cattle, but the charts have softened up over the last couple of weeks, which has us a little bit nervous here into the end of the year. I think ultimately over the long run, we can see these markets work higher, but how much more pain are we going to endure before marking a near-term low is the big question. The cash market was doing really well over the last couple of months, but it's kind of stalled out, and I think you're seeing some profit taking here towards the end of the year. Hopefully we can come back, start the new year pretty strong in this cash market and get things pumping again. The funds right now, they're long about 80,000 futures and options contracts in the live cattle market, which is fairly aggressive, but not to the overcrowded sentiment that we've seen here in the past.
Well, I hope you're right. You know, we had Goldman Sachs come out last night and downgrade our growth for the first, second, and third quarter next year, and it'll be interesting to see if that holds up, number one, as true, because a lot of times they don't get it right all the time just because they're Goldman Sachs. But number two, I'd like to see what that does to these prices here. But that's going to be something that we're going to have you back on and talk about a lot more, Oliver. So thanks for being on the show today.